The gold price is on its rise, but miners are still lagging behind. So this is the perfect timing for an investor to go out and to do due diligence with excellent companies that could benefit from the rising gold price. And one of those companies might be with me today because I have Warwick Rigger. He is the executive chairman of Aguia Resources. I think that's the latest gold producing company on the ASX, correct? Warwick, it's great to have you.
Thanks, Jan. Pleasure to be here.
Excellent. So Warwick, before we talk about your great milestones and achievement, let's talk a little bit more about the market at first, because as I said in the beginning, miners are still lagging behind, but the gold is on its rise. You've been in the industry for long enough. Is this the perfect timing for a takeoff of the junior mining companies?
This is the best opportunity I've seen for junior mining companies for a long time. And I say best because it's real. It's not EVs, it's not graphite or all these exotic industrial minerals. Gold is money. And if you're a junior company and you have got access to real gold resources and a treatment plant, you can turn that into cash flow very quickly. And with the equities market being so depressed and difficult to raise money for juniors, this gold market is coming along at the perfect time, and it will enable quite a number of smaller companies to start positive cash flows and build for the next generation of mining companies to come through over the next 10 years.
Excellent. And you have one of those companies with us today, right? Aguia Resources, you're the executive chairman. You do have your treatment plant, you do have a real gold, and you just poured your first gold bar. So tell us a little bit more. At the Santa Barbara project, you're now officially a gold producing company. Congratulations, first of all, right? But tell us a little bit more about the whole process of mining and refining the ore. Tell us something maybe about the operating cost and maybe the average gold grade in the ore that you're treating, if you can.
Probably the best thing about Aguia's Santa Barbara gold project, located in Colombia, is the grade. The grade at 30 grams per tonne is phenomenal. It's very hard to find something like that. Now, most of your new mines are coming on at 1 or 2 grams per tonne, but to come in at 30 grams per tonne, the gold price is very helpful, yes, but the company is not as sensitive to gold price movements as, say, 1 gram per tonne producers. But being 30 grams per tonne offers a lot of benefits. You can be producing, say, for example, you could be producing 10,000 ounces of gold at 30 grams per tonne, and that achieves very high profit margins. Any gold mine around the world, which is about 30 grams per tonne, you'd expect the cash operating costs to be about $400 an ounce or less. Gold price is just starting to get close to $3,000 an ounce, and so that means an enormous profit margin. $3,000 minus 400, that's a fantastic profit margin. So it's a license to print money. You don't need big, expensive equipment. You don't need huge workforces. It's short, it's small and sweet, and very manageable. It's heaven in the gold mining business.
Great, that's good to hear. And you now have your first gold bar. How long will it take until we have the second, the third? So what does it need to get all the things really going now and to get the cash flowing?
The first gold pour of any mine is proof in the pudding. It proves that there is gold and you can recover it. But it always takes a number of weeks, if not months thereafter, to optimize the plant, to find out which part of the circuit is working properly, what you have to spend more money on. And so what we found while we poured the gold, we realized that we had to commission a thickener before we were going to optimize it. A thickener is like a pre-production washing tank that washes out clays and deleterious elements that may impede the metallurgical process when you're trying to capture the gold onto the zinc in the agitator tanks. So the effect of this, the thickener we had on site, we hadn't installed it yet. So we just finished installing it on the weekend. That will actually enable us to double our throughput to achieve the 30 tonnes per day capacity the plant's supposed to be able to do. And that drops the residence time from 40 hours to less than 20 hours, which is industry standard. So now, within a week of 8 days of the weekend just passed, we'll probably be looking at our next gold pour, and thereafter a gold pour every 7 or 8 days, depending on scheduling. It's the start of the real cash flow. The first one proves it works. The second one's going to work better and will continue to improve. And over time, over the next 3 or 4 months, we intend to lift the capacity of the plant from 30 tonnes per day to 50 tonnes per day. And if you assume we're going to putting that 30 gram head grade through the mill, you're looking ballpark 10,000 ounces of per annum of gold production at a cash operating margin of about 2,600 US. So I won't say any more of that. I'll let you guys do the numbers, because the stock exchange is very particular on what it lets us say. We've got to have all sorts of studies done and people signing off and all sorts of compliance. But herein lies one of the great advantages of Aguia. We don't have to do all those feasibility studies and get sign-offs from third parties, because we don't have to go out and get debt finance. We don't have to raise a lot of money. We're very fortunate that when we acquired the project about 18 months ago, there'd already been a plant on site. It had already treated 500 tonnes of ore and recovered 20 grams per tonne of gold. Now, that wasn't optimized. I'm quite sure we'll do much better than 20 grams. But even if it's only 20, that's what we base our $400 an ounce expected cash cost on. Officially, we're not allowed to give guidance, so we've got to be careful what we say. We are allowed to report the gold as we produce it, but until we have a JORC resource, technically, you haven't got a mine, even if you're producing gold, because that's just the modern day of rules and regulations. Our next step, as we're increasing our capacity to that 50 tonnes per day level, once, if you're drilling, you might be drilling out an ore body, you'll come up with 50 or 100 holes, and you try and add up those intersections that might be spaced at 25-metre intervals. And you try and model what the ore body looks like. And then once you've modelled it, you then have to open up and go underground and see if your model's correct, and spend 2 years doing development and spending a lot of money. We do not have to do that, because we did it the other way around. We saw the ore body, we developed on it, we proved the mining parameters, the metallurgical characteristics. We know that we've got a viable ore body technically. Now we'll go back and start drilling it. So we'll have 2 drill rigs starting in a month or 2, and they'll probably be drilling continuously for years. We've got 7 kilometres of veins that have been mapped and identified, but not drill tested. We know where to put the drill holes. It's not wildcat. It's not real exploration. It's what you call brownfields exploration, because you step out 25 metres above and below, you know the orientation of the ore body, you know what it's going to be, so you're going to hit it. And as we start to accumulate a database of all these holes, we'll start to see how big this is. In Colombia, this sort of ore body can easily be multi-million ounces. We won't know till we drill it, but we're pretty confident we're going to have a lot more. The first JORC resource might come out in the middle of the year, but there's a bit of a wild card here. Whenever you're doing your geostatistics on an ore body, you always extend it out for another 25 meters beyond the furthest point of drilling, because statistically it's valid to extend it out. That you don't have an ore body that goes for 200 meters and then it disappears 5 meters away. It just doesn't happen as long as you've got your structure right. So we may actually be lucky enough to be able to get the geostatisticians onto it even before we do that drilling. And if they have sufficient confidence in the continuity of the mineralisation, we might get a shortcut to the JORC resource, and then the stock exchange will let us call it a mine. So, but the reality is there's a lot of gold there. It's going to be very low cost because of the grade. This is one of the best situations I've seen. Since we bought it, we paid about $1 million for it. It had $5 million spent on it previously. When we bought it, the gold price was about $1,800 an ounce. And $2,900 an ounce, that all goes straight to the bottom line. So, I'm pretty enthusiastic about this.
Excellent. Yes, I can imagine. Thank you very much, Warwick. So just to summarize the whole situation of the Santa Barbara project, at the beginning you said this is one of the best opportunities right now to look at junior mining companies because the gold price has risen and the miners are still lagging behind. That's first of all. Second of all, you said this is one of the best opportunities at Aguia to work at your great project because first of all, you have poured your first gold bar. In the near-term future, you're expecting 1 gold bar per week, as we can say, right? You have very low operating cost to get one of those gold bars out, so you can have high profit margins. You are going to have cash flow. You're going to have maybe your first JORC resource by the mid of this year. This seems to be like a lot of upside potential from the current status and situation where the company is based on, right?
Yep, it certainly is. Now, one point I'd really like to make, I've been a mining analyst. I've been around the gold mining sector for 40 years. This is the first time I've taken an executive position as executive chairman. And quite frankly, this is too good an opportunity just to hand it over to someone else and hope they run it properly. We've got a culture of being very closely aligned with shareholders. We're in this business to make money for shareholders, not for directors and employees in preference to everyone else. In fact, myself as chairman and the CEO, William Howe, we've both got about 5% of the company. We're the 2 largest shareholders. So we're very aligned with shareholders. And the best way to reward shareholders is to make sure that share price goes up. That will happen through a combination of proving ourselves in production, making profits, drilling out resources, all those things that you need for a good company, they'll underpin the share price. And, it is quite realistic to expect us to be paying dividends and even doing share backs within a reasonable time frame. But I say to a lot of people when I'm presenting them for the first time, you've heard the story, hopefully you like it, buy some shares, and I will be working for you because you'll be a shareholder and shareholders own the business. And I don't say that just because it sounds good. It's actually the way I feel. And my intention is to make this a role model in how to make money for shareholders, how to do the right thing. And, all shareholders have to be looked after.
Excellent. Warwick, that would be like the perfect ending, but we have to talk a little bit more about your upside potential because you're not just having the gold, right? This is really important. By the end of this year, you could be a company that has 2 producing assets, right? Just for the end, give us a little bit of an overview of the Phosphate project in Brazil. From my understanding, the development has progressed, right? You're on your way to achieve a great milestone with the lease of a treatment facility instead of buying one, which would lower your capex there. Just for the end, a brief update on the Phosphate project, please, for us.
Right. Well, all the balls are in a row. We've got a memorandum of understanding with an existing production facility that we can lease. Now, if we build a brand new one, it'll cost us $30 million. This facility we can lease And for the same amount of production we get for 30 million, we can achieve that for 5 million or less. And without the lead time, without the construction period. A big advantage is the company that we're dealing with has been operating in the area for 100 years. It's well known to the farming community, and they want to be marketing our product. So, when you set up a company in a foreign country for the first time, it can be lonely. But if you're well entrenched with the local community, with the support services, with the goodwill of the people around you, and your customers are all within 300 kilometres radius of the mine and treatment plant, that is very comforting. And we'll save you so much money by doing it smart, not throwing money at brand new plants. And we've got the potential to throw off very strong cash flow for a period of 50 years plus. So it's not as sexy as gold, it's not as glamorous, but it'll be a great cash cow. And the change of our management philosophy with the incoming new management means that we're much more likely to be making strong profits than we would have been otherwise. So eventually, as we build a phosphate business up and it becomes very valuable, don't be surprised if we sell it off or distribute it in a new company or maximize the value through a demerger. Because we've got so many other good projects in Colombia that we intend to progress to. I think that's what is more exciting at the moment. So, this company has turned the corner. The ball's going the right way. We don't need to go and raise more money because the phosphate will be funded out of the gold. As those gold bars start coming in next week and the week after and after that, well, that's when we really start to have some wind in our sails.
Excellent. Warwick, thank you very much for summarizing the whole upside potential of Aguia right now. I think especially in the near term, we can see some really great developments. You have the gold price backing you at the moment. We're on the way to $3,000, so that would even help you a little bit more. Let's hope for the market to wake up. Thank you very much for your time to telling your story, and we talk again soon.
Thanks, Sean. Pleasure to talk.